You know what nobody's talking about? While you were celebrating New Year's Eve, something happened in China that could trigger the biggest wealth transfer in modern history. And I'm not being dramatic here. Listen to this. At 11:47 p.m. on December 31st, Chinese ports began refusing ship-to-ship silver cargo deliveries to warehouses approved by the New York Mercantile Exchange. The same night, the United States made an urgent proposal to Beijing. They wanted to purchase 50 million troy ounces of silver immediately, obtain export permits, and they were willing to pay with U.S. Treasury bonds, bypassing the SWIFT system entirely through bilateral currency swaps. Beijing's response? They rejected it completely. Now, if that doesn't make your hair stand up, let me put this in perspective. We just closed out 2024 with silver up over 150%. That's the largest one-year performance we've seen since 1979. That's 45 years. And some people are already calling the top, saying we had our parabolic run to $85 and it's over. But here's what they're missing. Let me show you something that'll change how you think about this entire market. There's a cup and handle pattern that's been forming in silver for over 40 years, 4 decades. And if you measure from the bottom of that cup to the top and project it forward, we're not looking at $85 silver. We're looking at a minimum of $200 silver. But it gets even crazier than that. There's a trend line that's been forming since the 1800s. This isn't just a generational move. This is a once-in-a-century event that's unfolding right in front of us. And that single green candlestick we just printed in 2024, that's not the climax. That's just the beginning. Let's talk about what's really happening behind the scenes. For decades, there was an arrangement. China would manufacture cheap products, ship them to the West, and then recycle their trade surplus back into U.S. Treasury bonds. In exchange, the U.S. would work with China to suppress commodity prices, especially critical minerals like silver. It was a beautiful system for both sides. China got to be the world's factory, and America got cheap goods and someone to buy their debt. But that deal is dead. It's been dying for years, and now it's completely finished. China, Russia, and the BRICS countries aren't aggressively recycling their U.S. dollar trade surplus into treasury bonds anymore. Actually, let me be more honest. They're actively trying to recycle as little as possible. Think about it. Why would China continue helping to suppress the price of a critical mineral like silver when they're no longer funding the U.S. government? The entire incentive structure has flipped. And here's what's fascinating. Starting January 1st, 2025, China implemented physical silver export controls on a case-by-case basis. Now, I've been in the manufacturing and export business with China my entire professional career, made millions from it, and I can tell you something from experience. Every single time the Chinese government has implemented export controls or restrictions in the past, I'd get flooded with phone calls. Export brokers, customs brokers, everyone telling me, don't worry, it's nothing. We can work around it. Just pay a little extra, grease some palms, we'll get your stuff out. But this time, dead silence, radio silence. That tells you everything you need to know about how serious this is. Right now, we're witnessing something unprecedented. We have multiple prices for silver operating simultaneously. The COMEX price is sitting a little north of $70. The Shanghai price is around $85. And in Dubai and other Middle Eastern markets, prices are even higher than that. All these paper prices are going their separate ways. And here's the key insight. This isn't like 1980, this isn't like 2010 or 2011. This time there's massive industrial demand following silver. Solar panels, electric vehicles, 5G infrastructure, semiconductors, data centers for AI. All of this requires physical delivery. Companies can't build solar panels with paper silver. They can't manufacture EVs with COMEX contracts. The physical price is becoming the only price that matters. Let me read you something that just came through from a mainland Chinese source with access to breaking news. This is still being authenticated, but given what I know about how China operates, this is credible. Official confirmation from the Shanghai Port Authority. As of 11:47 p.m. local time on December 31st, Chinese ports have begun refusing ship-to-ship silver cargoes to delivery warehouses approved by the COMEX. The U.S. proposal was extremely straightforward. Urgent purchase of 50 million troy ounces of silver, immediately obtain export permits, pay with U.S. Treasury bonds, and bypass the SWIFT system through bilateral currency swaps. Beijing rejected it. Think about what this means. The United States is so desperate for physical silver that they're willing to use Treasury bonds as payment and bypass their own SWIFT system. And China still said no. This is a complete breakdown of the old system. We're watching the separation of physical and paper markets happen in real time. The paper games that have been played for decades in London and New York are coming to an end because you can't deliver paper to a semiconductor factory. You can't build a solar panel with a futures contract. Now let's zoom out and look at the technical picture because this gets really interesting. If we examine the yearly candlestick chart for silver, what we're seeing is unprecedented in modern times, that massive green candle we just printed. In the 1970s bull market, we had an army of green yearly candlesticks from 1972 all the way through 1979 and into 1980. We had maybe one red candlestick in that entire run, and it was barely red. Same thing in the early 2000s silver bull run. Multiple consecutive years of gains. So when people say we had a great year, but you can't have two consecutive good years, the actual historical data completely contradicts that. In real bull markets, you stack green candles year after year. But here's where it gets even more compelling. The gold to silver ratio is telling us a story. Right now, it's still elevated compared to historical norms. During the last major silver run in the late 1970s, that ratio compressed dramatically. Silver outperformed gold by a massive margin. We're starting to see that compression again, but we're in the early innings. When this really gets moving, when that ratio starts collapsing, the moves in silver will be breathtaking. We're talking about the kind of price action where you wake up and silver is up $5, $10, $15 in a single session. Let me address the fundamental driver that most people aren't connecting. The entire global monetary system is going through a reset. Not the kind of reset the conspiracy theorists talk about. I'm talking about a real structural reset of how international trade settles. The Bretton Woods system broke down in 1971 when Nixon took us off the gold standard. Then we moved to the petrodollar system. Oil was priced in dollars. Everyone needed dollars to buy oil, so everyone held treasury bonds. But what happens when the world's largest oil producers start accepting yuan, rupees, rubles? What happens when the BRICS nations create alternative clearing systems? The entire foundation of dollar demand gets undermined. And this is where silver becomes absolutely critical. When trust breaks down in fiat currency systems throughout all of human history, people return to tangible money, gold and silver. But here's the twist in our modern era. Silver isn't just monetary. It's the most critical industrial metal on the planet. You can't run the modern technological world without silver, the most conductive element, the most reflective, the most photosensitive. Irreplaceable in countless applications, solar panels alone, if they reach just 20% market penetration of what's planned, would consume 100% of annual silver supply, just solar panels. Now add EVs, add solid-state batteries, add the massive AI infrastructure being built, add 5G and 6G networks, add all the semiconductor manufacturing. The industrial demand is absolutely insane. And here's something most people don't realize. Both sides of the current global power struggle need silver desperately. The people building the surveillance state, the digital control grid, they need massive amounts of silver. AI data centers, facial recognition systems, the infrastructure for CBDCs and digital IDs, all of it requires silver. And simultaneously, the people who understand what's happening and want to protect themselves from that system, they also need silver as money, as wealth preservation, as a hedge against the collapsing dollar system. So you've got what some might call the black hats and the white hats, both fighting over the same commodity. Both sides realize the other needs it, and both are scrambling to acquire as much as possible. This creates an unprecedented situation. There's plenty of gold supply in bullion form globally. Central banks hold thousands of tons. But silver? The above-ground inventories have been decimated. We've consumed silver for decades in industrial applications where it's not economically viable to recycle. It's gone. Spread out in billions of devices and applications in quantities too small to recover. The COMEX inventories are at critically low levels. The LBMA is facing similar issues. And now China, which has been one of the largest silver producers and refiners, is saying no more exports. Let's talk about what this means for the paper markets. For years, the big banks have played games with paper silver, naked shorting, creating infinite paper contracts backed by minimal physical metal, slamming the price whenever it started to run. It worked when everyone was playing the same game. But now you have nations and industries that need physical metal. They don't want contracts. They want bars. They want the actual metal they can hold, refine, and use. When the physical shortage becomes undeniable, when the paper markets can no longer deliver, that's when you see true price discovery. And that price is going to shock people. Think about the strategic implications. Silver is more rare than gold in terms of above-ground refined supply. The mining ratio is about 8 parts silver to 1 part gold, but the price ratio, it's been over 80 to 1, sometimes over 90 to 1. That makes zero sense from a fundamental perspective, especially when you consider that silver has all these critical industrial uses that gold doesn't. The only reason the ratio has been this distorted is price suppression through paper markets. But you can't suppress physical markets when there's real demand and constrained supply. Here's another angle people aren't considering. The US government is in a fiscal crisis. The debt is going parabolic. They need someone to buy treasury bonds, but China isn't buying anymore. Japan is selling. Who's left? The Federal Reserve has to step in, which means money printing, which means currency debasement, which means anyone holding dollars is getting silently robbed. Silver, along with gold, becomes one of the few ways to protect yourself from that theft. It's real money. It's tangible. It can't be printed. It can't be created out of thin air by a central bank computer. And here's what should concern people about the current system. The AI infrastructure boom that everyone's celebrating, all these data centers being built everywhere, it's pushing up utility bills for regular Americans while the profits go to a handful of corporations. It's being financed by your tax money and debt that devalues your currency. And what's it being used for? Building the surveillance grid, biometric identification, social credit systems, the infrastructure for CBDCs where they can track and control every transaction you make. Your tax money is literally being used to build the prison of the future. And they need silver to do it. Massive amounts of silver. So we have this incredible irony. The people building the control system need silver. The people trying to escape the control system need silver. And there's not enough to go around. Something has to give. Either the price goes to levels that seem absurd right now, or certain projects don't get built, or both. My bet is the price adjusts to clear the market. And when I say adjust, I mean moves that will make the 2024 performance look tame in comparison. Let's talk strategy for a moment. If you're watching this and you've been stacking silver, you had a great 2024. Congratulations. But this isn't the time to get complacent. This is the time to maximize your position while you still can. Look at the historical precedents. In the 1970s bull market, once it got going, it ran for years. Multiple consecutive years of massive gains. The early 2000s bull run, same thing. We're just getting started. That 2024 candle that matched 1979. In 1979, that wasn't the end. That was the beginning of the most explosive phase. The question isn't whether silver is going higher. The question is how much higher and how fast. When you have nations refusing to export it, when you have multiple price tiers emerging globally, when you have industries literally unable to function without it, when you have the paper markets losing credibility, all of these factors point in one direction, up. Dramatically up. You're going to see price candles that you've never seen before. Days where silver moves $20, $30, $40. It sounds insane now, but when the physical shortage becomes undeniable, when the industrial buyers are bidding against each other for available supply, when the paper market finally breaks, that's exactly what will happen. And let me be very clear about something. The bearish sentiment on silver right now is a gift. People saying the top is in, that we had our run, that it's time to take profits, those people are going to be devastated when they look back. They're using traditional market logic in a market that's fundamentally broken. This isn't a normal commodity cycle. This is a structural shift in the global financial system happening at the same time as unprecedented industrial demand. The two most powerful drivers in any market, monetary demand and industrial demand, are both spiking simultaneously in silver. That combination is explosive. You know what you need to focus on? Preservation and growth. Preserve what you have by getting out of depreciating fiat currency and into real assets. Grow your position while these prices are still available. Because I'm telling you, there's coming a day when silver isn't readily available at any price. When the premiums are so high that retail buyers are priced out. When the only people who can acquire size are nations and corporations. We're watching the biggest players on the planet fight over this metal right now. China saying no to the United States. Think about that. The implications are staggering. The great repricing is happening, not just in silver but in all commodities, but silver is special because it's both money and industrial material. It's the bridge between the old monetary system and the new technological world, and that bridge is burning behind us. The paper games are ending. The physical reality is asserting itself. And when the dust settles, the people who understood this early, who positioned themselves properly, they're going to experience a wealth transfer unlike anything in modern times. This is your moment. This is the opportunity, not next year. Not when everyone else figures it out. Now, while you can still get physical metal, while the premiums are still reasonable, while most people are still distracted by stocks, crypto, real estate bubbles, the smart money, the sovereign wealth funds, the family offices, they know what's happening. They're accumulating, quietly, aggressively, and you can too. The world is polarizing, the wealth gap is exploding, and it's being driven by these kinds of structural shifts that most people don't see until it's too late. You're either on the right side of this trade or you're on the wrong side. There's not much middle ground. The people who position correctly in silver right now, they're going to build generational wealth. The people who ignore it, who stick with their traditional portfolios, who trust the system, they're going to watch their purchasing power evaporate. So here's what I want you to understand. Silver isn't just an investment. It's a strategic position in the greatest financial transformation of our lifetime. The system is changing. The dollar system is breaking down. The paper markets are losing credibility. The physical world is asserting itself. And silver sits at the absolute center of all of it. You can't build the future without it. You can't preserve wealth without it. Both sides need it, and there's not enough of it. That's the setup. That's the opportunity. That's why what happened on December 31st in Shanghai matters so much. That's why the US was desperate enough to offer treasury bonds for physical silver. That's why China said no. They know what's coming. They know what silver is worth. They're not giving it up for depreciating paper promises. They're keeping it, they're hoarding it, and you should be too. Now let me paint you a picture of what's actually happening in the physical markets right now. The COMEX registered inventory, the metal actually available for delivery, has been dropping steadily. We're talking about levels that would have been considered crisis levels a decade ago. But here's what makes it different now. In the past, when inventories got low, new supply would come in. Refiners would step up production. Countries would export more. Not anymore. The flow has reversed. Countries are importing and hoarding, not exporting. Refiners are already running at capacity. And the new supply from mining operations, it's spoken for before it even comes out of the ground. I want you to understand something about the mining industry too. Most silver isn't mined as a primary product. It's a byproduct of mining other metals like copper, lead, zinc. So when people talk about silver mining ramping up to meet demand, they don't understand the industry. You can't just decide to mine more silver. It's tied to the economics of other metals. And even if you could increase primary silver mining, it takes years to bring new mines online. Years. We don't have years. The shortage is happening now. Let's talk about what happens when the paper market breaks. And it will break. It's a mathematical certainty. You have hundreds of times more paper silver than physical silver backing those contracts. As long as everyone's playing the paper game and rolling contracts forward, the system works. But the moment enough participants stand for delivery, demand physical metal, the whole thing collapses. And guess what? That's exactly what's starting to happen. Industrial buyers need physical. Countries need physical. They're not playing the paper game anymore. When that break happens, and I'm talking about the moment when the COMEX can't deliver, when they have to settle in cash instead of metal, that's when you see the real price discovery. Because suddenly all those contracts, all that paper leverage, it's exposed as fraud. And everyone with a brain realizes that the only real silver is physical silver. The premium on physical over paper will explode. We're already seeing it with the Shanghai premium over COMEX. That gap is going to get wider, much wider. Here's another factor nobody's discussing enough. The coming energy transition, whether you believe in climate change or not, is going to consume staggering amounts of silver. Every solar panel needs silver. The average panel uses about 20 grams. Doesn't sound like much until you realize they're planning to install billions of panels. Billions. The silver required for that alone would dwarf current annual production, and that's just solar. We haven't even talked about the silver needed for EVs. Each electric vehicle uses significantly more silver than a traditional car. Some estimates put it at 25 to 50 grams more per vehicle. Now multiply that by tens of millions of EVs being produced annually. And the 5G infrastructure? Each 5G cell tower uses substantially more silver than 4G towers. They're planning to install hundreds of thousands of these towers globally. The semiconductor industry is expanding massively. AI chips, graphics processors, every advancement in computing requires more silver. The medical industry uses silver in countless applications. Water purification systems. The list is endless, and all of this demand is hitting simultaneously, right at the moment when the largest silver exporting nation is saying, no more exports. Let me tell you something else that should concern people. The derivatives market in silver is massive. Banks are holding enormous short positions. When the price starts really moving, those positions become toxic. Banks will face margin calls they can't meet. Some will fail. We saw what happened in 2008 when derivatives went bad in the housing market. Imagine that, but in a critical industrial commodity that's needed for everything from solar panels to smartphones. The systemic risk is enormous, and the governments won't be able to bail them out because you can't print silver. You can print dollars to save banks, but you can't create physical metal out of thin air. The geopolitical implications go even deeper than most realize. Silver is a matter of national security now. Countries that don't have adequate silver reserves won't be able to build the technology infrastructure they need. They'll be dependent on nations that control silver supplies. We're seeing the beginning of silver being weaponized in global power struggles. China's export restrictions are just the start. Other countries will follow. Russia has massive silver reserves and production. Think they're going to just export it freely to nations that are sanctioning them? Not a chance. And here's something that should absolutely terrify policymakers. The West has been so focused on financial engineering, on services, on digital economies, that they've ignored physical commodities. China, Russia, the BRICS nations, they've been quietly securing commodity supplies for decades. Mines, refineries, processing facilities, stockpiles. They own the physical supply chains. The West owns paper assets, debt instruments, financial derivatives. When push comes to shove, when the system resets, physical beats paper every single time. You want to know why the US was willing to offer treasury bonds for silver and bypass SWIFT? Because they're desperate. They see what's coming. They understand that without adequate silver supplies, their entire technology sector is at risk. The military applications of silver are critical. Advanced electronics, missile systems, radar, satellites, all require silver. You can't maintain military superiority without it. So when national security is at stake, suddenly silver isn't just a commodity. It's a strategic asset of the highest order. And for individuals, for regular people trying to protect their wealth, silver represents one of the last opportunities to get ahead of the curve. When this thing really breaks, when the masses finally understand what's happening, the stampede into physical precious metals will be unprecedented. Right now, less than 1% of investors hold any physical silver. When that number goes to 5%, 10%, there's not nearly enough metal to go around. Premiums will skyrocket. Delivery times will extend to months. Dealers will run out of inventory completely. I've talked to dealers who are already seeing unprecedented demand. They can't keep premium products in stock. 1-ounce rounds and bars are flying off the shelves. And this is before the general public even understands what's happening. Imagine when the mainstream media can no longer ignore the story, when the price is making those massive daily moves, when people see their neighbors getting wealthy from silver positions, the FOMO will be intense. And by then, it'll be too late for most people to build meaningful positions. Think about the psychology too. People are conditioned to trust the system. They believe the stock market will always recover. They think real estate always goes up. They trust that their bank deposits are safe. Their pensions will be there. But what happens when that trust breaks? When people realize the system is rigged against them? When they see the currency devaluing in real time? They panic. And when they panic, they rush to tangible assets. Gold and silver have been the panic buy of choice for thousands of years. Human nature doesn't change. The smart play is to position yourself before the panic, before the masses figure it out, while you can still buy silver at anything close to reasonable prices. Because I promise you, there's coming a time when people would do anything to get silver at $70, $85, even $100 an ounce. They'll look back at these prices with regret and disbelief. How could we not see it? How did we miss something so obvious? Well, you're seeing it now. You have the information. The question is, what are you going to do with it? The avalanche is coming. You can position yourself to ride it down and profit immensely, or you can watch it bury everything you've worked for. I know which choice I've made. I know which choice the smart money has made. I know what sovereign wealth funds are doing. I know what the ultra-wealthy family offices are doing. They're accumulating physical silver like their lives depend on it, because in a sense, their wealth does depend on it, and yours does too. The only question is, which choice are you going to make? Because time is running out. The window is closing. And once it shuts, once the physical shortage becomes obvious to everyone, once the price starts making those massive moves that bring it to mainstream attention, it'll be too late to build a meaningful position. This is it. This is your chance. This is the moment where you decide whether you're going to be on the right side of the greatest wealth transfer in modern history, or whether you're going to be one of the people who had the chance and let it slip through their fingers. Don't waste it. The Silver Lady is calling, and she's not going to wait forever.